Goldman Sachs could use an infusion of profitability and popularity. Being Wall Street's best bank is not a popularity contest, but being the one with the best stock market valuation is, and Goldman Sachs is not winning. The bank run by David Solomon reported its second quarter numbers this week, and they were dismal. Earnings fell year on year by around 60%. Now, at chief rival Morgan Stanley, earnings for the second quarter fell just 13%. And Goldman's problems were pretty much self-created. It took a big accounting write-down on commercial property investments it made long ago and on David Solomon's failed consumer lending strategy. Now, Morgan Stanley have long been rivals, but the gap has widened a lot. In market cap terms, they were about the same size for a while. Goldman was actually bigger for around a decade before the pandemic. But since then, Morgan Stanley has pulled ahead, and it's now worth about $40 billion more than its rival. On one hand, that's a little bit unfair because on some important profit measures, they're kind of the same. If you ignored the accounting write-downs from the second quarter, Goldman would actually have done a little bit better of the two. Goldman's still also the top M&A advisor, is the top equities trading house. There's one thing, though, that Morgan Stanley boss James Gorman has that David Solomon doesn't, and that's an ability to promise things that investors want. Goldman has been bigging up Morgan Stanley's wealth management business, which now makes up about half its revenue and is bigger than Goldman's. But he also likes to flash around big numbers, which investors seem to like. Goldman had already said that Morgan Stanley wanted to manage $10 trillion of customers' money. And then on Tuesday, he casually upped that to 20 trillion, which is easy for him to say because he's stepping down within the year. Are big targets the same as actual big results? No, of course they're not. But whatever Goldman is doing is working for investors, and the difference between the firm's second quarter showings just reinforces the idea that if Wall Street were electing a class president right now, David Solomon would not be it.